Hey guys, welcome to my channel, Crypto Vegas, where we make sure you'll get the best crypto knowledge on YouTube, explained with beautiful animation. Cryptocurrency is something that has shot up in popularity since 2017 and continues to attract a lot of investors. But at the same time, it is a concept that might be intriguing to many, but people can get intimidated. An insight which is very intriguing from a study by Nork shows that 62% of the people claim that they don't understand crypto, whereas 31% said that their lack of understanding is the very reason they don't invest. At this channel, we aim to fill that gap of knowledge, and today, we're going to tackle the slippery topic of how to predict crypto prices, and also take a look at how to recognize trends. To put it simply, think of this as a game that depends on market factors such as demand and price, and winning the game depends on how well you're able to predict and act. We're going to teach you the techniques you can apply to predict and act accordingly. You're going to take these tips in practice so that you can make decisions fast, within minutes and even seconds. Continuing our game analogy, you need to be able to understand game theory. There are three types of players: those who risk everything, gamble, and rely on sheer luck; those who don't risk anything and then don't win anything; and those who are smart, they know how the game works, all the ins and outs, and are able to strike a balance. And of course, we want you to fall into the third category, for sure. So, how to predict cryptocurrency prices? You're probably thinking, how do all these investors do it? We need to keep in mind that forecasting is key, and analysis is very crucial for that. In that way, it is similar to a traditional stock market. There is a common misconception that crypto prices are linear, which is an oversimplification of all the factors that affect the value of a coin. Cryptocurrencies are extremely volatile and can experience sharp rises and falls in their price. First off, let's get you all familiar with two fundamental terms that are used in the crypto market. These are two states in the crypto prices. Bullish. We have a bull market when the price is thriving or is expected to keep rising for a while. Bearish. On the opposite end, the bear market is when the price is falling or is expected to plunge. Now the question pops up: how to know whether the market is bullish or bearish? That's what we're here for, as this is something that you'll need to be able to figure out on your own. We have access to a lot of data, charts, and other various tools at hand to assist us when it comes to the crypto market. We simply need to have a good grasp of them so that we're able to make the best decisions. Let's look at a few methods that can be used to predict crypto prices. Technical analysis. Technical analysts believe that what happened in the past will influence future market movements. It involves all the historical statistics, including price movements, trading volume, and many other past indicators and metrics. Based on watching the price history records, plus some extra calculations, you may be able to notice similar patterns and catch hints of when it may go up and down again. Fundamental analysis. Fundamental analysis approaches price direction from another perspective, not from the crypto price itself, but from a macro viewpoint and other external factors. These are the things like demand and use case for a project, as well as other factors such as the world economy, company revenue, weather forecast on an upcoming storm, or even a blockbuster film release. An example of this would be that in the last few weeks, Elon Musk announced his bid to buy Twitter. Fundamental analysts would study and analyze the situation because, in the past, Musk's actions have caused crypto prices to go up and down. And predicting that Twitter would accept his offer, you would know that the prices would shoot up, as they did. Prices for Bitcoin went from $38,000 to $40,000. These are the historical trends and the current events that can potentially affect the crypto market. The last one is rooted in the human factor. Sentimental analysis. The market is not only driven by fundamentals, but also short-term sentiments, which make currencies volatile on an everyday basis. It is often seen that despite long-term fundamentals showing an uptrend, a currency remains down due to an overall bad mood. This bad mood means that the vast majority of traders are committed to a down position due to a certain reason. Such sentiments often help traders assume a particular position. Let's take a brief look at some of the practical tools you will require for applying these techniques. First off, the mysterious art of reading charts. A lot of you get confused when it comes to these candlestick charts, and I admit it can look intimidating, but let us break this down. It is crucial to be able to understand them, as these demonstrate the fluctuation in price over some time, and they are fundamental components of this industry. The color of the broad candlestick portion shows whether there was an increase or decrease in price. Green indicates rising prices, whereas red indicates a decrease in prices. The bottom, or head, of the green candlestick shows the opening price, and the head of the red candlestick shows the closing price. Following this rule, the top of the candlesticks shows the closing price in green and the opening price in red. The next thing to note is the thinner lines, with the top showing the highest price and the bottom for the lowest price during that period of time. That covers the basics. Now all that is left for you to do is to practice, practice, practice. For recognizing trends, we have another tool called trend lines. This method focuses on outlining a linear route made from high to low points to draw an upward bullish or downward bearish trend. This excludes abnormal or occasional fluctuations appearing during that session. On the contrary, we have a tool called moving average. This tracks the movements by connecting the average of a range of market prices. Most often, closing prices are chosen. Based on the moving average line, you can catch up on the trend in the longer term together with typical points. Trend lines, on the other hand, are usually more suited to short-term decisions. So, these are the fundamentals required to know about technical analysis and reading the crypto market price charts. If you want to become proficient, a lot of time and effort will be required to master these techniques, along with utilizing factors of fundamental and sentimental analyses in your predictions and decisions. We hope you grasp the basic concepts related to crypto price predictions and trends. Remember that these things will be easier to understand once you move past the theory and into actual practice. Thanks a lot for watching. I hope you will consider subscribing for more helpful videos. See you next time.